Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Bhatia. Lots of movers and shakers in trade today, but clearly Nifty is seeing that resistance at 17,800 levels already. If you see overall, 18,700 levels already, and 18,770 though we've managed to surpass right now, but whether it's able to sustain those 18,800 levels or not is something that we need to wait and watch. Clearly a 0.5% move coming in there, so it's going to be an interesting day of trade as well. Vinit Bolinjkar joins in, head of research at Ventura Securities, to discuss the movers and shakers. Vinit, good morning and welcome to the show.
Good morning to you, Hiral. Thanks for having me.
Always a pleasure. Vineet, let's start with the Ashok Leyland. They did have their investor meet, some good momentum we are seeing in terms of the stock price. And clearly, the strong truck demand expectation is in FY24 is something that the street is really optimistic about. What's your view and what would you advise an investor to do?
So definitely, the truck demand is very positive, and we are expecting that the truck demand will somewhere peak out in FY25. So because it's a cyclical industry, 2.5 years is what we get in an upcycle, and with rates also on hold, we expect the stock to do well. But right now, we feel that the stocks valuations are quite rich. And so we are expecting Ashok Leyland to be more of a momentum play, and hence we would recommend investors to get into Aisha Motors or Tata Motors in place of Ashok Leyland if you were to look at buying it for the long term.
Right, so that's with regards to Ashok Leyland. Moving from there on, a few of the other names that are in focus from the auto pack, you have a Bajaj Auto, and you have a Bharti Airtel that is in focus as well. And that's mainly because the angle that I'm looking at is Nigeria's currency, naira, that has devalued to a record low. Now, the Nigerian central bank has removed the trading restrictions on the official market. What's the kind of impact you're expecting on both these counters, and what would you advise investors to do?
See, if you look at Bajaj Auto, 50% of its business comes from Africa, and almost 25% of this business is coming from Nigeria and nearby areas. So definitely with the naira being hit, the the affordability is going to be hit in the medium term, and as a result, we expect the stock to slightly correct from these levels. But more impacted will be Bharti Airtel because 50% of its business is coming from Nigeria and of its African business. And here, we are seeing at least a 10% correction to the SOTP valuation. So we expect this stock to retrace more than that of Bajaj Auto. Having said that, Bajaj Auto has been very resilient in maneuvering from the domestic market to the export market. And currently, we expect Bajaj to concentrate more on the domestic market, and it will be able to kind of you know uh, gather momentum once this correction is done with. And hence, we would advise investors to look at buying Bajaj Auto on dips in case you're interested. But as I said earlier, we believe that Aisha Motors offers better value, uh, and we are quite optimistic on Aisha, and we think that there is still an upside of almost 20% from current levels if you are looking to buy.
Right. Moving on, TCS is in focus as well, and everyone's talking about the $2 billion deal that has been nixed. But couple of points that we've been picking up over there is that in terms of the amount, 85% of the $2 billion is something which TCS has already received. And in addition to that, if you see, the remaining is expected to come in as well in the next 2.5 years. So this was a 10-year deal. The only concerning point that comes in over here is that the extension that these IT companies usually look out for such long tenure deals is something that would go away. How would you look at it?
See, you know what? I think it's not going to impact TCS materially.
Hmm.
But what is going to happen is that, it's sentimentally, it's very bearish. I have been, and Ventura has been very bearish on the IT sector continuously. and we do not see anything happen over the next couple of years. So we would want to stay out of this sector, and we believe that if you are optimistic, play the domestic growth story, play the capital goods story, play the infra story, play the consumer story, as these will give us better returns in the next 2 to 3 years than the IT sector. The IT sector, in our view, is going to be an underperformer, and this trend will play out as we see the Q1, Q2 results come through.
Right. Apart from that, from the IT pack, one more stock I want to talk to you about is a Wipro. Now, clearly, the offer period is likely to be in terms of beginning of July. This is with regards to the buyback. And if you see the premium over the offer price, that stands at around 14.5%. Clearly, everyone's talking about the acceptance ratio to be in the range of around 10 to 15% for non-retail, considering a 20 to 25% tendering by large shareholders. Would you advise investors to tender to the buyback?
Absolutely. You should take this lucrative offer and exit Wipro. Let me give you an example of what happened with TCS way back when they did a buyback. The buyback was done at 4,500, and today the stock is 32. So you're going to get you're getting a super deal, whatever you can uh, participate in the buyback, and once the buyback is through, sell your shares also, because Wipro has been one of the most stark underperformers in the IT sector, and we expect this stock to fall further from here.
Right. Apart from that, you have the pharma pack that is in focus. In fact, some bit of traction that's coming in, not only for pharma majors, but also with regards to hospital companies as well. What would you recommend an investor to do with pharma? And do you think the valuations are compelling to enter at current levels? What would your top pick be?
So we like Indoco Remedies, which is a slightly stock which is not in the radar of everybody. We believe that the stock has got significant upside potential and is trading very cheap. But having said that, if you see the recent stocks which you have seen, DRL and DVs, we believe that the story in DVs can play out again, because they have got a couple of custom synthesis projects which are coming on stream. They're also getting into new product development, and they're undertaking a capex of about 1,200 to 1,500 crores. So all this we will see the momentum revive in DVs from second quarter, and we are almost on verge of completing the first quarter, so it's a very optimal time to buy DVs. Having said that, look at Dr. Reddy's also. Dr. Reddy's is getting into biosimilars, new chemical entity formation. So, this 1 year could be give you a surprise 20% upside, which could be quick, in my opinion. And so you could look at buying Dr. Reddy's more as a short-term play rather than getting into it long.
Right. And Vineet, how are you looking at the open offer with regards to Unichem Lab? Because clearly the open offer is likely in July. If you purchase at current market price, we're looking at a tender price of around 440. What would your advice to investors be?
I think you're getting a stellar return. It's very, very good arbitrage. So investors should participate in the open offer when it comes.
Right, and someone who's not holding a Unichem, should the investor look at entering at current levels then?
We would want to get a better perspective on what are their growth plans, before we kind of advise investors what to do with the stock.
Right. Vineet, another one on the open offer front is a TCNS brands, right? Again, we're looking at a tentative period of 26th June to the 10th of July. And if you see the premium over the current market price, that stands at little over 20%. And as we know, this open offer is a result of the acquisition by Aditya Birla Fashion. What's your view?
Again, same here. Participate in the offer, take it.
Hmm.
There's a lot of competition out there. So, while you're getting to exit, this would be the best time to do that.
Right. Moving on from the aviation space, you've seen some spectacular numbers coming in for Indigo in terms of market share data for the month of May. A little over 60% is what we've seen, and clearly, the negatives of peers is something which is auguring well for Indigo as well. What's your view on Indigo, and what would you recommend?
So, 36% volume growth in YOY, 15% month on month. It doesn't get better than this. And with the market consolidating as it is, and with, demand for air travel only picking up and accelerating, I think that, it is on the verge of a turnaround. And we are if you hold this stock for a couple of years, you're getting this stock at 20 times FY26 earnings. And definitely this stock is slated to go much, much higher for me. So
Right.
definitely worth a buy at current levels.
Right. Overall, Kalyan Jewelers did see a big block deal in today's session, and since then you're seeing some good momentum in trade today. How are you looking at the jewelry counters, and what's your view?
Kalyan is metamorphosing his model, and it is going towards folk-owned stores where the franchisee oriented growth is going to play out over the next 2 to 3 years. So what we are going to see is the return on capital employed improving. Number one, the margins may dip a bit, but at the bottom level, the net margins are going to go up, and all these structural changes which are there are very healthy. And in my opinion, it's a dark horse. You do not get such a large India play retail uh, jewelry segment. And if you see the discount to the market major, that is Titan, it's huge. And hence, I believe that this is one stock which can give you a very, very good earning potential out here.
Right. So the gap between the first, which is the market leader, and a Kalyan is absolutely a lot, and that's exactly what Vineet is pointing out too. Moving on, Vineet, the railway counters have been in focus as well. The kind of order book that they have been building on the back of the government orders that have been coming in is spectacular. In fact, Rights has had an order win, Titagar as well as RK Forgings as well. How are you looking at this segment, and is this a long term story, or is this something, I mean, look at the counters, invest in at current levels from a 2 to 3 year cycle?
So, definitely the railways are coming into their own, and it's a long-term growth story. What we've seen happen in defense is playing out in the railways, and Rights is trading at 2.5 times its order book is of its it's trailing revenue stream, and in my opinion, it's trading 11 times FY26. So if you have a 2 year horizon, you can easily rate the stock at 15 times, and you can get a 40% upside from here. So that's what is as far as Rights is concerned. If you look at the Titagar and the RK Forging JV news that came out, it's nothing new. It's the same news being detailed again. The only thing that they provide is that they've given a guidance in terms of what volumes they'll be doing. So 40,000 year one, 60,000 year two, and then for the rest of the years, 80,000 tons is what they're looking to deliver. And between the two, I think RK Forgings offers significant value. Titagar has run up a lot, and we think that the valuations of Titagar are very demanding. Whereas if we talk in terms of RK Forgings, I think their return ratios are fantastic. Their growth numbers are good, and their revenue base is fairly diversified. So we would definitely recommend investing in RK Forgings. We have a target of 400 plus on this stock, so you are going to see good returns come out in the next 24 months.
Right. So overall, I think a lot of potential that we're seeing in terms of railway names as well. Thank you, Vineet, so much for joining us on the show and sharing those views with the counters that we've already discussed. So a lot of stock-specific action is what we are seeing in terms of where markets are concerned. If you see in terms of Nifty as well, let's quickly look at the top gainers. The breadth is pretty much skewed in favor of the advances, but you have the likes of an HDFC Life, which is the top gainer, followed by Bajaj Finserv, Dr. Reddy's, Hindalco, as well as SBI Life. So life insurance players are doing pretty well in trade. Bajaj Auto is trading under pressure, and this is clearly the impact with regards to where the devaluation of lira goes. Nigeria being one of the bigger markets in terms of exports. Tata Consumer, BPCL, as well as TCS and a Wipro, which are trading under pressure as well. So yes, a stock specific day. It is Friday, and an interesting end to a week that we'll be watching out for. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned.